Hello and welcome. This is week 19, day number 2, and we're going to talk today about what is better, real estate versus stocks. So we're going to kind of talk about and compare why I don't like investing in stocks and I like investing in real estate better. So that's what we're going to be discussing today. There's pros and cons for each one of them, but it's no secret that this channel is a heavily influenced channel by or biased by real estate. And so there is absolutely no shame on my part to say that I prefer real estate investing to stocks. Stocks have one big problem that I think that you'll agree with me, that this problem alone makes real estate a much better investment by far. So let's just take an example of $10,000. Or let's say $100,000. So let's say that you went ahead and purchased $100,000 out of your savings account or out of your retirement account, and you were to put that into the stock market because you're self-directing it or something, in most 401ks and IRAs, etc., retirement accounts, they invest in the stock market anyway. So let's just say you self-directed right to other stocks or whatever. You take $100,000. What kind of returns would you see? Well, I don't know, traditionally between 0 to 10%. That's the average, depending on the financial advisor that you listen to. They'll tell you between 0 and or minus in the minuses and 10%. But they'll tell you the average is what, 6%, I think, is what they say the average is. So you would probably buy $100,000 worth of stocks, right? And your ROI, of course, is going to be 100,000. I mean, 6% out of 100,000, right? It's going to be $6,000, no problem. So now let's take that same $100,000 and put it down as a down payment on a rental property. So now you have just purchased let's say at 20% down payment, you have just purchased a $500,000 asset, an asset that belongs to you, and you can own these assets in your retirement accounts. You can take your retirement funds and buy this asset, right? So you can get absolutely, a much better rate of return than, 0 for sure. You'll get, I don't know, 3, 4, 5% return just on the rent alone. But then you'll get 2, 3, 4% return also on appreciation because the property will increase in value. And then you'll get another 2, 3, 4% on your equity because your tenant is paying down the loan, right? But your 100,000 and so forth, so on and so forth. There are so many ways that you can, out of $100,000, you can get a return in so many different ways when you put that money into a piece of property, right? You cannot do that with stocks. But the biggest thing that you can do with real estate that you cannot do with stocks is leverage. $100,000 gets you a $500,000 asset. Anybody can understand that. Or let's just say $10,000 gets you a $50,000 asset. In the stock market, you can't do that. You cannot go to a bank or another source of lending and put down $100,000 and say, hey, give me another, give me $500,000 to invest in the stock market. It's not going to work. That is not, they're not going to give you a penny to put into the stock market. Now, we should pause and think why that is, because a lot of people want to say that stocks are much better than real estate. Okay, well, how come you can't get a loan to go buy stocks? If it's so much of a better asset, why can't you get leverage to buy stocks? Why can't you? Right. And so I think we've been conditioned to think by, everybody, all these big brokerage houses, been conditioning us to think that investing in the real estate market is conventional investments, and that investing in real estate is an alternative investment. That's fine. They can think that, no problem. But it's the reverse. You and I know that. So I would encourage you to stick around, till the end of this video, because what we're going to do next is we're going to go and try to get assets. It gets better for us because that same $100,000 down payment for that same $500,000 asset, that house or that building, that real estate, that piece of real estate or that piece of land, right? That same property, we can discount it. So that 500,000, we can buy it at a discount. We go and we negotiate with the seller so that we can get a discount. So thus giving us, the ability to take our $100,000 and maybe not just buy one asset, but buy two assets. And that is why we want to negotiate, so that we can walk into an asset where we literally have equity already built in. And then we can go and we can get a loan against that equity, pull out the equity, as you guys probably know, get that equity out, and then that money is not taxed, because debt is not taxed. And then you can take that money and then put it as a down payment against another piece of real estate. But if it's negotiated correctly, then we can do the same thing, have equity, pull it out again, get another asset, and then another asset, and another asset. And as you can see, then you have exponential growth now, and you have what Einstein called the ultimate investment, which, you take something so little and you can grow it via just being very smart, so that's what we do here in this channel. We go and we find assets that we can buy at a discount. We don't want to buy at retail price real estate. What we want to do is we want to see if somebody might give us a discount on their real estate. And if they don't want to give us a discount, that doesn't mean we can't buy them. We can, even if we don't get a discount. But if they give us now seller financing, so we don't have to ask the bank to give us that loan. But what about the seller giving us a financing or allowing us to take over that mortgage that he or she may have, so that we don't have to go through the bank now? And then we give that seller a down payment of maybe not even 20%. We give that seller a down payment maybe of 10%, 5%, or even nothing. And then if that seller agrees to finance, right, we can even negotiate with the seller to not charge us interest. So we can find situations where it's 0% down, 0 interest, 30-year loans or financing from the seller, right? So now we take our $100,000 and we're like, man, we don't have to spend it at all. So that's what we attempt to do here. We don't have to spend it at all. We talk to sellers to find situations like that. We're not going for the zero down, 0% financing. We're just going for, whatever makes sense according to the deal, but that is the potential. Now, how often does that happen? It happens a lot more times than you can imagine. If you sit here and you talk to sellers and you negotiate these deals, you can do that. Now, if you don't want to do that, I do that, and I share those deals with you so we can do them together, right? So if a seller tells us zero down, 0% financing, 30 years or whatever, maybe 40, 50 years, depending on how much retail he wants on that property, then we can negotiate the terms. So they give us the either the price that we want, which is a discounted price, or they give us the terms that we want, So either way, we got to find a deal. So we can't pay cash for retail value. That is just the only thing that we avoid. Is we will not pay cash, 100% cash, for retail value. So if we're going to pay retail value for something, it's got a cash flow. That is the number one thing. That is the first rule of investing in real estate is it's got to cash flow. And that includes all the expenses, including property management, including debt service, paying down the mortgage, including, a cushion, a savings account for that specific property. In case something happens, we're putting money into that account all the time, every month, so that we can cover expenses, including property management, including taxes, insurance, all of that stuff, HOA fees, whatever else that goes to maintain that property. After you subtract all of those expenses at the end, we should have a good amount of cash flow. If we find that, it doesn't really matter what we pay for the property, in my opinion. But it does help if we can get it at a discount. That makes the deal even sweeter. Okay. So now at this part of the video, we're going to move into phone calls, so you can kind of see how we talk to these potential sellers to see if we can find these deals. That's what the rest of this video is all about. And before we do that, if you can give me a like, a subscribe, and a follow here, a comment below if you like these videos, and that will really help me. It takes you less than a nanosecond to do that. Just hit those two buttons right below this video, so that I can encourage me to keep doing this and putting out free content to you guys. So let's get into the call. Now, each call is broken down 2 segments. I want to know what the value of the property is, if it is going to be flipped. The reason I do that is because if I end up wholesaling this property, the buyer, the cash buyer, is going to want a deal that he or she can flip. But I also want to get the value, the cash flow value. So we do the comps based on recent sales, and then we do the comps based on cash flow, right? Based on income. So that's what you'll see me do. I will mention that throughout this I'll call it webinar. So if you have any questions along the way, you can put them in the chat below, and feel free to fast forward and skip some areas. At some points I get quiet and stuff like that because I'm typing. I can't show you my screen because it's sensitive information about the sellers and all kinds of stuff, us, etc. So unfortunately, I cannot show you my screen, but you can hear all the calls and everything. So let's go ahead and do that now, and get your pen and paper ready. Let's go to work. And remember that these videos are, first part is theory, and second part is implementation. So feel free to watch my other videos It follows the same format. I don't just want to be a talking head here and teach you, classroom style. I want you to see the operations. I want you to hear the conversations. Everything in real estate happens when you negotiate. You got to negotiate. And so if you cannot negotiate a good deal, then you shouldn't go into this and then just go back to stocks, because with stocks, you cannot negotiate. You don't have to negotiate, really. The stock price is set and you just go and buy it. But if you want to do this and you want to do it on your own, you have to develop the skill to negotiate. That's why the rest of this video is allocated to showing you how I talk to these potential sellers and how I negotiate with them. Okay, so but if you want to skip that, you can just come with me and we do deals together and we make money together. I want you to make money, and of course, we want to make money. So those are the three ways to move forward from here. Okay, so this first property, let's see. He would be interested in a cash offer. He wants $35,000. Owned the property for 15 years. Sorry, 17 years. And it's a vacant lot in Lehigh Acres, Florida. So the estimate here is 17,000. And rents there can be in the 2,200 range. So let's see here. So we need to build a house on here. Okay. So let's see. Okay. So now we go into the second portion of this video, start making phone calls.
Leave your message for 33.
So no answer. We will move on to the next. So how we find these potential deals is through marketing. We either text them or call them or cold call them or show them an ad on social media. And we just pretty much are asking people if they're interested in selling their property. That's pretty much what we all do. Once they come into our system, they go into our system, which is a CRM, customer relationship management software. And from there, we just follow up with them and just try to figure out why they're selling. And if the greater the pain, the bigger the discount, so we try to focus on pain so that we can get discounts on properties. It's not necessary for a lot of people, but for us it is. Let's see here. This is in Alabama. Okay. Sold this property 6 months ago. Okay. They were really interested because they sold it. Sold it for much 110. So let's see. So they sold it for 110. He's trying to sell. He wants to sell ASAP. Fair condition, needs roughly 30K in repairs. He's owned it for 6 months. Family member passed, once 120. Turned down 100, but he sold it for 110. So we should have been more persistent here. He would have taken the 100. Yeah, that's for sure. Okay. Live and learn. Okay, so let's see here. Minnesota. Okay. I can't tell if he sold this. Oh, it's a twinplex. Each unit has a basement. Upstairs. Sounds okay. He doesn't have any problems. Wanted to sell it for 250. Otherwise, he won't sell it. That's not bad. The estimated value here that we calculated is 250. 230. It's probably cash flowing. 1031 exchange transaction. We will sell at 250, not less. Okay. Okay, let's see here.
Please leave your message for 5125.
We'll try to ask for seller financing. I'll call back. Okay, and so I just make notes on my CRM, and it keeps everything very easy. Here's the notes.
Hello?
Yes, hello.
Hello?
Yes, can you hear me okay?
Here you go, get it now.
Yeah. So am I speaking with Roger?
You got the wrong number, buddy.
Oh, okay. Mauro, is that the last name here?
No.
No? Okay. Well, I apologize. Thank you.
That's okay. Have a good day.
Likewise. Happy New Year. Wrong number here. Okay. Very nice guy.
You've reached Elizabeth of Equimetric Capital. Please leave your name and telephone number.
Her name is Elizabeth with something. Okay. Sounds like an investment. Okay, so move on to the next. Picked up, hung up. But hung up right after. Okay. Let's see this here. Lehigh Acres, okay. All right. Assessed value is $6,000. See what we can get it for.
Your call has been forwarded to an automatic voice message system.
No answer. No answer, okay. $261 estimated. Rent is 28.
Hello?
Yes, hey, good morning, Chris. How you doing?
Pretty good. What's up?
Good, good. So my assistant had spoken to you and had said for me to give you a call because you were possibly interested in selling your property on Bryant Avenue.
So the property is a duplex house, legally duplex in the 70s, and we actually put a small efficiency apartment on the third floor.
Oh, cool.
And we have a full glass blowing studio.
Oh, okay. Okay.
The problem is the full glass blowing studio is active and we're blowing glass. For us to sell it, we would have to be looking at 550.
How much?
550,000 start.
550. Okay. And you have the units rented?
No, we don't.
Okay.
We're living in the whole house.
Okay. Okay. Got you. So what do you think overall the rent, if we were to rent it out, would bring in like monthly?
I have no clue. We haven't rented for 15 years.
Okay. Okay. Well, that sounds. Let me do some digging and let's see if we can come up to the 550.
Yeah, I mean, 550 is one of those, depending upon when you need us to get out by, because we have to build a new studio.
Gotcha.
So.
Yeah. Taking notes here.
Yeah.
Okay.
But I mean, I get calls like this all the time. Everybody wants to, "What, can you do it for 130?" I was like, no.
Wow. These guys are. That's vicious. I mean, I'm looking at Zillow, and Zillow says 261, and they're giving you 100. Wow, that's crazy.
Yeah.
That's crazy.
Well, I know it's been going on for years. So.
Yeah. Do you have a loan on it?
Huh?
Do you have a mortgage on it?
Yeah, we do.
Okay. Okay. Yeah, that sounds good. Well, let me see what I can do. Let me put some figures together, do a little bit of due diligence. And is it okay if I call you back, say next week, middle of the week?
Yeah, sure.
Okay.
Sure.
Well, I appreciate that, Chris. Thank you so much.
Okay.
All right. We'll talk to you then. Bye-bye. It sounds a little complicated. Could barely hear him. He wants 550K. Turned into a bit of a two-family. Told him I would look into it and get back to him next week after due diligence. He said gets calls like this all the time. Live in the house. Okay. This is Lehigh Acres. Okay. Did you say Larry?
Yeah, I did.
Huh. I was looking for Ed. Huh. I don't know if so is it, do I got the wrong number?
No, you got the right number. Who's calling?
Oh, this is Ben. This is Ben. You had spoken to my assistant about your property there on Lehigh Acres. And wanted to
I wanted
6
Boulevard.
Yep, 618, yep. 16 and 18, you said?
Yeah, 616/618.
Okay.
It's a duplex.
Oh, cool. Okay. So are you still wanting to move forward with it, selling it?
I do.
Okay.
But, nobody seems to be willing to pay the price, so I'm okay sitting on it too.
Okay. How long have you had it?
Well, I've had it a long time. I don't know. 15 years maybe.
Yeah. You know, most people I talk to in Lehigh, you know, they've owned their properties for a long time. So
yeah, I really don't care. Maybe one day I'll build on it.
Yeah, build a multifamily on there. That'd be nice.
Well, it'll be duplex tomorrow. Yeah.
Duplex, yeah. Okay. So what would you like for it?
20,000.
20,000. Okay. All right. I think I can do that. Let me see. Let me just check something here real quick. Okay. 20,000. And do you have a mortgage, or do you own it outright?
I own
Okay. So, okay, let me do this. I think we might be able to do something here. How soon are you looking at closing?
It doesn't matter, as soon as possible,
As soon as possible.
Really not in a hurry. I don't have it on the market. I don't list it anywhere.
Mm-hmm.
But once you start the paperwork, I'd like to close as quickly as possible, but I don't want to drag the closing out.
Sure.
But I'm ready to go in the county.
Okay, sweet. And no preference in title company. I assume I'll just kind of pick the title company to close through.
I'm sorry.
Yeah, no preference. You don't have a preference on the title company that we use?
No.
Okay.
No.
Okay, cool.
I'm very legitimate company.
Yeah, okay. Very nice. So you said you answered the phone as Larry, but your name is Ed as well.
Yeah, it's Edward Lawrence.
Okay, gotcha.
Everybody calls me Larry.
All right, well, sounds good. Well, let me go ahead and do a little bit of due diligence here, and I will get back in touch with you towards the end of the week. Is that okay?
Yeah, that's fine.
Okay. Well, I appreciate it, Larry. Thank you so much.
Okay, thank you. I'll talk to you later.
Talk to you soon. Bye-bye. Am I picking you up? Yeah. Really? No, I'm not being.
baby cop just took it. Oh, that's good. No.
No, don't pick her up.
Did you pick me
She
up?
gets poked at every direction. They
Oh.
were- No, let me see. Let me try. Let me try.
If I do, can you please let me pick you
Yes.
up? Not the back thing. Just pick up like.
Okay, please lay up.
That's it. That's it.
No.
Oh, I know. I know.
Okay.
Okay.
I check that back. Baby, come on, baby. That time it's all.
Right there. Why don't we try to keep it not right there? A little bit higher. A little bit higher. Like it's too ticklish.
Balance your weight. Don't just go big. So gently. Don't tip over daddy. She would overweight him.
Okay.
Sit you around.
Oh, don't get the mama.
Look, he's gonna get cheap.
Look at that, baby.
Get on it, get on it. Okay, let me see.
Look, baby. Look.
Oh, good. Whoa, don't hurt yourself.
I haven't picked him up in years.
She's good. I'm not gonna go to the
No, yeah, you can. Or not the way you can go. No, you
I
can.
know, not the way you put the down.
Oh,
Look at this. Look at this.
she's so light when she's not happy at all.
Look.
Don't do that to your knee.
We don't. Ouch. Alright, jump back right, cause yeah, I'm going. Alright, when Kezia has her hog back. Sit over there.
Sorry about that. I sometimes I just forget to edit out stuff out of my videos. So I apologize for that little distraction there. But getting back to the calls here, this seller, this sounds good. 20,000 is good. Most people want 40 or 50. Some of them even want 90. So this is like 10,000 a piece. This is for a duplex. This is a fantastic deal, in my opinion. So we can give him probably most of the money down and then carry a note. If I don't mind, offering that to people, carry a note for the remainder. So let me see here. His name is Lawrence. People call him Larry. Okay. Move to one lead. Exit dialing. Let's see here. Okay. And pitch him a carry back. Real nice guy. Okay. He said, let's see. It is a 2-lot. 616 and 618. 616 and then 618. So that would make it 10K a piece. Okay, so that is fantastic here. Let's go to warm. To warm lead here. Okay. That is great. So we got one. So a duplex in that area, I think, would be around. Let me see. Let me go look at the. Let me look at Zillow here. So if I go on Zillow, and you guys can do this too, I go to the sold, then I go home type, then I'll say multifamily on here, and then I'll see what's sold here and what price. 2 units. Here we go. Here's a multifamily here. Yeah, there's 2 units. 270. 270, yeah. But that was in 2021. 270, this is 260. 2020, sold in 2020. This is something that sold. It was this is new construction duplex here. His estimate is at 530 for new construction here, which I believe it. Yeah, they're building something here for, 535. So I think this is a good deal. Okay. Let's see what we can do here. Okay, so like I said, this is the fun part of investing in real estate, because versus the stock market, because you're able to kind of find these deals and kind of negotiate with these people. So we got that. So we're gonna go back to we're gonna do a session number 2. Next video is session number 2 for week 19, day number 1. In all day today, we're going to talk about the stock market versus versus real estate as an investment. By far, real estate is a superior investment. With the stocks, just leverage alone, which is one of the smallest benefits, or one of the many benefits in real estate. You can get leverage in real estate, invest, in this case, how about we invested $20,000 into this, and then an additional, so out of the 100,000 that we talked about at the beginning of the video, we would do 20,000 for this. Then we go and we build a duplex, and we put down, and this is perfect because we saw that duplex at 530 something. So we would invest around 120,000 into this deal. Well, actually, the 20,000 would be covered by the loan. So you are literally investing the $100,000, turning it into a duplex, and then you're getting those rents every month, and then they're paying down your mortgage. So it's beautiful. It's the same thing, the same example we were talking about at the beginning of the video. So thank you for being here. Let's go and see if I'll take a little break, come back, and we do it again. Okay, talk to you in a little bit.